So I just realized none of my thing recorded, but that's fine. So we're gonna have to do it again. So, the reason why I got into this NAS trade was because I had bearish structure, and that's what today's video is about. It's about how I got into this trade, trading smart money concepts, basic concepts. This video is for beginners, people who have traded smart money concepts. If you traded other stuff, that's fine too. But I don't use trend lines. The only indicator I use is volume. Okay, so if you notice here, on the 15-minute chart, we have bearish price action, right? On the 4-hour chart, we have bullish price action, okay? So when you're buying something, it doesn't matter if you're trading Forex, crypto, it doesn't matter. When you're buying something in the market, you always want to buy something at a low price, which is called your discount price, which is when price is at a dip, cheap price. And when you're selling something off in the market, like you're selling off an asset, Bitcoin, Nas100, you want to sell at premium prices. So that's all we're doing in Forex. If you're trading smart money concepts, all we're doing is you're trading at, we're buying and we're making money off low prices and high prices. We sell off high prices and we buy off low prices, okay? So if you can write that down, what I just wrote in on the screen, premium prices equals high price, expensive price. And then I'm gonna write sell here so you guys can see it too. Sell high price. Sorry, it's weird. Sell high price. Okay, so that's buy low price. So write this down. Buy at discount prices, sell at high prices, expensive prices. So how do you know when it's at a discount price? That's what market structure is for. Okay, so if you notice, guys, here on market structure, we have overall bullish price action. And if you divide our current range in half, what's our current range? Our current range is our current piece of market structure. It's not our market structure as a whole. So what I mean is our current pieces of market structure are this current high that I just drew the arrow to, and this current low that I just drew this other arrow to right about now. So that's our market structure for now. And if you notice, price action on Nas100 is closer to the bottom of the 4-hour structure. So that means we're heading towards discount levels. So if we zoom in on the 15-minute and just erase all that, we zoom in into the 15-minute. What do we have here? We zoom into the 15-minute. We have price action right here. Okay, and so that's actually how I got into this trade. And so if you look at my blue pieces, just my obvious blue pieces of structures, we have highs, we have lows, lower lows and lower highs. So when we have lower lows and lower highs, that means that price is bearish. I initially thought price was going to come up to this gray box at top, this supply zone, this imbalance gap, but price didn't end up doing that. So what did I have to do? And so here's why I didn't wait for price to come up to that top box. So a COS is when price is continuing structure. So if you're in a bearish market and you're breaking lows, that's a good thing because you want the market to go down. And that's called your continuation of structure because it's continuing downward. And when you're BOS, break of, that stands for break of structure, it's basically like you're breaking a trend line. Because if, for example, if this is all declining, this is all bearish. And so if price had a bunch of demand, let's say for instance now, and broke our previous blue high that I have on the screen, that means that there was a BOS. And so key elements that you want to look for a BOS is unhealthy price action, which means just straight down or straight up, because healthy price action is down, up, down, and up, down, up. There is always a movement before a continuation towards the direction that we're going. So if we're going down, we're not just going straight down. We're going straight down, up a little bit, straight down, up a little bit. And the downs are, those straight downs are created by volatility in the market, such as news events, political events. And what basically happens is when there's high volume because of these events in the news, the market sometimes doesn't have time to come and retrace itself, right? And so what we're going to do, and what we do is we wait patiently And we use that as footprints in the market, because when the market moves, that's smart money. Because retail traders only have tiny little candlesticks because they have small amounts of capital that they can enter in the market. So they can't make the market move. But people that can control the market, such as banks in the Forex market, institutions, hedge funds, they have more capital than we do. So when they make their moves in the market, it's really visible in terms of physical price action and also on the volume, because volume shows you who's in control of the market because it's full of money. So for example, if you turn on the volume chart and you look at where I entered here, you can see that there's a big giant red spike in volume, and that's a good thing because I was looking for it to go down. So I was on the red team. You can look at it, you can divide it like that. I was looking for the red team, which is bearish. And so on the 15-minute, we're not bullish like on the 4 hour, because the 4 hour is what I use for my long-term analysis. And the 15-minute on the NAS is what I use for market structure, and sometimes the 45-minute. And so if you guys be patient and look at this, where was my entry at? And what happened here? Okay, so instead of price coming back and going up to that gray box I told you guys about earlier that you're looking at under my face, that empty gray box, instead of doing that, price came down and we had a breakup structure, a BOS, which is what I explained a couple minutes ago. You can rewind the video. And where was that BOS, you're asking? Okay, I'm gonna show you. So when price was up here in this current range, and what I mean by current range is this current blue piece of structure, which is that current blue high under my face, and that current low, okay? And so the break of, sorry, not break of structure, guys, excuse me, continuation of structure. This isn't a BOS. A BOS is when we're reversing a trend. A COS, continuation of structure, which is what it stands for, COS, continuation of structure. That is when we're continuing a trend. And so these price structure breaks are okay. And so what we're going to do here is we're going to take this and we are going to write COS here. And we are going to put this at the bottom. All right, so we had a COS, and where did that happen? That happened, technically it didn't happen right there, but usually when I'm in the market, I like for two pieces of structure to break. So we had one here, which is where the arrows pointed to, the bigger one. We had price break that previous high. We had price break that low right there. And if you still can't see it, look at where I'm drawing next to the arrow with the blue highlighter. That, if you can see it now, that was the low that got broken, and this low next to it got broken, and also that low. And so technically your COS should be here. You see what I'm doing? Look, pay attention. You see what I'm doing? All right, so the COS was broken there. And once I realized that, we also had volume on the volume chart on a higher time frame. We had red volume, so that was telling me that there was currently, remember what I said, volume simply shows us who's in control of the market, okay? And since that's a fact, I noticed that there was more volume after the COS going downwards. So that means that smart money wasn't done taking the market down. They're not ready to go back up. And also, after I got into that trade, this trade was before the news. I trade sometimes before the news and after news. Okay, so, and once it broke that, what did it leave behind? A gap. And so if you look at where I drew that gray box, a gap is the space between those two wicks where price did not get filled. And I'm gonna zoom in so you guys can see what I'm talking about, so you can clearly see it. And so you see that arrow? That arrow is pointing to that wick. You see that wick that I'm pointing to next to the black candle that it's on? Good. And you see this other wick I'm pointing to with the arrow? Just follow the arrow. Those are wicks, right? So wicks usually fill each other out and tap in. But look, between that top of that wick where the arrow is pointing to and the bottom of this wick at the top where the arrow is pointing to now, it let the gap. Because when there's volatility in the market, such as news, like I said earlier, the market doesn't always have time to go down, up. So right here, I know it's a small gap, but we went straight down without going back up a little bit and filling in that gap. And because of that, I noticed that, and basically I entered right here in this area. And I'll show you. And if you guys want to know exactly how to, like the details, like, okay, but where do I put the line at and all that, that's in my other video. But this one, I'm just showing you guys what I did because it's Tuesday and I just want you guys to understand. So when you're trading Nas100, guys, I'm gonna make it really simple. When you're trading Nas100, you are basically trading. You're gonna be using the daily, the 4 hour, and the 15. The daily, the 4 hour, and the 15. Okay, and the reason why I say that is because the daily and the 4 hour helps you see the bigger trend of where Nas is going, especially when you add volume to that. Okay, so when you add volume to that, right, it creates more of a confluence. So the first thing you want to do when you're trading Nas100 is go on the 15-minute chart, zoom all the way out, and then just start drawing your highs and lows with a thick line, like I did with those blue lines, so you can clearly see. You don't have to do this if you traded before and you have experience, but if you're a beginner and you want to use mine to help, do that. And what I want you to do after that is pay attention. The first thing you should do if you're not a good trader is start learning being good at market structure, and also knowing that every pair's market structure is different. So this is why I like to trade only a little bit amount of pairs. So if you're looking at my watch list, you only see 2 pairs, but that's not all I trade. I trade Nas100 Bitcoin, and I trade 5 other pairs. So together that's 5 Forex pairs and 2 Bitcoin. I'd like to just say futures, 2 futures, because technically I don't give a fuck what they say. Bitcoin, commodity, futures, all the same in terms of Bitcoin, because Bitcoin is technically both in a way. Nas, I know, can be put into a different category, but yeah. So go on the 15-minute chart, do what I just told you to, and your take profit. So your take profit and stop loss. So your stop loss, when you're trading smart money concepts, your stop loss shouldn't be too big because we're trading at exact levels. It's not made up, and your take profit should be the next low or liquidity. Here, I didn't find any, and what I mean by liquidity is trend lines or double bottoms and double tops. Trend lines, double bottoms, and double tops, these are areas where smart money likes to take people's money, right? So so trend lines, double tops, and double bottoms are liquidity. And so that's how smart money takes their money, because they know that regular retail traders, when they first trade Forex, they trade support and resistance and stuff like that, and so it's obvious. And so what I do is I look for those to actually take profit. I don't enter off the trend lines and support and resistance. I trade those are my take profit. That's when I'm ending the trade. And so if you can't find any of those, then your next take profit is going to be the low after. So I targeted that. I targeted this low right here, which you're looking at the gray arrow that I'm drawing, the bigger one. That was my take profit. And yeah, guys, I want to also show you guys something, if you guys don't mind staying with me for a couple more seconds. It's going to be real quick. So if we look here, we're on my Instagram, and see, I don't care if you guys see stuff. It's cool. You guys are cool. Business chat is. I want you guys to see something. I want to show you guys something. Now, just wait. If you guys don't want to wait, resume. Fast forward the video for like a second, and fast forward the video. Let's see. So here we go. I want to show you guys the actual results of that trade. So check this out. You see that? This was the result of the trade. And I know for some people that's crazy, because you're not used to seeing that kind. You're like, oh, how'd you make all that? And stuff like that. And I want to give you guys another tip, because I don't like gatekeeping. I'm going to just tell you guys. So here's the thing. So when you're trading Forex, if you don't have other streams of income to put into it, to make a lot out of it, to change your life or do something, what you should do is invest in a prop firm. And I know people don't like prop firms sometimes because they like having their own money, which is cool. But if you don't have the resources, you should take advantage of the low overhead cost it gets you to get into these prop firms. And what I mean by low overhead cost is, you can, for example, go to you can go to toptier.com, and you can pass a challenge. You can pay like $85 to $200 for one of their challenges. And I know that sounds crazy, but look before you just click off the video. Look up what I'm saying. Look up who the company is, the owner, the CEO, the vice president, what they've done, their track record, everything. And so, so here's the thing. Pass your prop firm challenge. You can start with a small account, like 5K. Pass that, and once you pass that, the profits you're going to make on the prop firm challenge, you get to keep about 90% of the profit depending on the firm, and they usually let you keep 90%, right? So here's what I want you guys to do. When you keep your profits, for example, let's say you made $1,000 on Bitcoin, they let you keep 90% of that and take 10%, and then once that goes to your bank account, you can literally put that in your own account. So using prop firms are like leveraging credit. It's like credit in real life, because like when you apply for credit, you're using credit to do business, because credit is capital, and capital, you need capital to do to grow and do business, right? So that's why people use credit. It's like an investment, and so you can think of this as your credit. So yeah, guys, I know it seems crazy. If you guys want to talk to me more, just message me. I don't care. Yeah, guys, I really hope you guys found something out of this video. I know it wasn't too detailed and stuff, but I just wanted to get some points out there. And if you guys want to talk to me on Instagram, I'm cool with that. We can video chat if you want to. I don't care. I have Discord and all that crap. But yeah, guys, peace. I hope you guys found this valuable. And again, it isn't hard. Here's the secret. The secret is, people always say the mindset does matter. So if you're negative and there's stuff happening in your life and you try to come up to the charts with a negative, if you try to go to the charts with a negative mindset, what's going to happen is when you go on these charts, that negative mindset of, oh, I need to make money quickly, and you're going to go on the charts and look for opportunities that aren't there, like I did. And then what's going to happen is you're going to end up losing a bunch of trades. Especially when you lose the first one, you're gonna be like, oh man, I think I lost that trade. I want to try again. I want to keep going until I make the money back, and then you're gonna lose more. So the two secrets I learned is patience. Patience is important. So waiting for your setup. I know sometimes you get excited when you see the market moving, but it's just better to be patient, because you'll make more from that one trade than, it's just like this. For example, that was $1,700, about $1,800 I made off Nas. And that was one trade. That was literally like the only trade I took last week. And there's nothing wrong with multiple trades, but for me, I like taking 4 to 6 trades a week, because I can literally just take those trades and be done and because if you get a lot of money per trade, you don't need to trade as much, because smart money doesn't trade all the time. Literally, the trading strategy I do is it's not even a strategy. It's just based off supply and demand and where the market's going. And the first thing I do before I get into it is I look at the news. I look at the news, because the news is where I find all my setups. I trade the pairs based off the news. So I have pairs, right? I have my watch list. You saw my 5 pairs. And then I go on, for example, Forex Factory and other things like that to see, I go on Forex Factory and other things like that to see the setup. So if there's, like, for example, tomorrow is Wednesday, US dollar news, 8 o'clock. I'm probably going to look for US dollar pairs before that time. So if you have to work in the morning, don't trade New York session, trade Asian session in the evening. And if you can't work in the evening, if you can't trade in the evening, you have to choose between the evening, the middle of the night, or the morning from 8 a.m. to 5 p.m. Because 8 a.m. to 5 p.m. is the New York session. That's the medium fast moving market. It's fast moving. London is the fastest and most liquid moving market. So I trade all of them. Most of the time I trade New York session starting at 8, and then I trade Tokyo session. So I call it Tokyo, it's called Asian, but Asian session is pairs like Australia, Swiss franc, Japan, things like that. And those are slower moving pairs. So if you're like working and you want a slower pace, trade the Asian session. So Asian session starts at like 5 p.m. So you can get home like 6 and stuff and still have your you still have time, because it ends at 3 a.m. And so yeah, guys, if you have any more questions, just ask me. I have I have ebooks showing you examples and all this stuff. I don't make my stuff expensive and all that. I just really want to show people how to do this, because I've been doing this for about 8 years, but I didn't start becoming like profitable until like last 2 years, literally. And I quit multiple times, but it's just like I got so far, and I kept losing, but I also know I had a lot of knowledge, so there's no point of just stopping. So I might as well just keep going, even though I didn't want to. And so and I'm still learning now. I'm still learning a lot of things every day, but it's really not that hard to me. It's just you have to have a system when you're trading Forex, because if you don't have a system, then that's what's hard, because if you want to be profitable in the money, all the money is just it's just a byproduct of your setups, like that $1,800 you're looking at on the screen, or from the NAS setup that I showed you here. All that is a byproduct of my trade setup. So when you focus on the charts instead of the profits, like I know sometimes we see the chart and we see us making money on the trading on the app, and we're like, oh my god, I'm making so much money. You want to take profit? Don't even look at it. Focus on the chart, because when you look at it, you're going to want to take profit early before it gets there, and then you won't. If you take profit early, you won't know if your strategy actually works. So let it hit at least 90% to your take profit in it, or something like that. I usually let it hit all the way, but 90% is good too. And another tip I have for you is, understand the trading session, the time you're trading, and then once you understand your trading session and the one you pick based off your own lifestyle, you can then go to the Forex Factory economic calendars and you can choose the pairs that you want to trade. So if you're trading New York session, good pairs are pairs that start with the US dollar. And if you're trading London session, obviously Euro, GBP, things like that. And there's other pairs too. There's New Zealand. No, wait, is New Zealand? New Zealand is counts as, Australia. New Zealand's more an Australian session. But yeah, guys, I'm gonna wrap this video up. It's 21 minutes. But yeah, guys, I hope you found some info out of this. And yeah, I'll make some more videos soon. Peace.